Good evening, I hope you're doing well. In today's video, we'll continue to use price actions in an attempt to taking an informed decision in the market. Once again in today's video, I have selected the Nifty chart on the daily time frame, which means that we will largely be addressing this video from the perspective of a swing trader. The interesting point of analyzing a single chart over a longer time frame or over a longer duration is that the chart becomes very instructive as it unfolds. For example, you would note that we have been following the Nifty chart for quite some time, and there were various points that we discussed throughout this process. For example, initially when we spotted that the market is trading in a range, we simply focused on connecting the highs and the lows of the range in order to determine if there is a reasonable pattern in play. So I'll just darken this here. And subsequently, we were obviously getting alert because the market was making a third test to the top of the range that there is a possibility that the market could break out on the long side. And why did we give a higher probability on the long side? Because whenever the market enters into a range, it generally moves in the direction of the preceding move. And since the preceding move, as we can see, is generally up, therefore, the likelihood that the market will continue in this direction is slightly higher. It doesn't mean that the market cannot fail or cannot break down. We were prepared for that eventuality by means of our stop loss. So, this is where we close the previous video, and obviously, subsequently, the market as we know it clearly took out this range high. And once the market took out this range high, we no longer need this line. We understand that this particular line will be a support in the future, but really what the market is now playing on is the very mildly sloping trend line. And the good thing of a mildly sloping trend line is that it is very easy for the market to hold this. The bad thing is that whenever the market pulls back, the pullback will feel like an extremely deep pullback, sending the market back several days or weeks of price action. Any which ways, after this range was broken out, it becomes imperative for us to see what the market has changed on the longer time frame, which we will get to in a bit. But now let us continue focusing on the current price action of the market, which is today. As we can see that there is no ambiguity that the market is in a range, and the reason for it being in a range is because market is obviously trading below this level. And over a very long term period, the market is continuously behaving like a ranging security. In addition, we had seen a pattern, and we understand that patterns are only formed when a market is in a range. Patterns rarely form when the market is in a trend. Now, coming back, once we have understood that the market is in a range, we only focus on what is happening in the recent high and what is its relation in comparison to previous highs. So for example, if I simply highlight this point here, we will see that this is without any ambiguity a period high as of now at least. And this too is a period high. This remained a period high for quite some time. And this high, that is the one that is created today, is significantly higher than the one that was created prior. In other words, the market is in a range and it is overbought. Whenever a market is trading on the higher point of the range, the market becomes overbought. And sorry about that. And the question that we have to ask ourselves is, do we buy the market when it is overbought? Now, those of you who have been following the theory that I have suggested, it is that once we identify the trend of the market, we do not buy in overbought conditions, which means even if we identify the range, the trend to be as range with a long bias. Why a long bias? We'll come to that later. Firstly, it's broken on the higher side. The previous direction was on the longer side, and the work that we have done on the longer time frames has sent us on the long side of the market. In other words, it means that whenever the market reaches the range high, we don't short or take profits. Rather, when the market reaches the range low, we try to enter into longs. So here we are at a range high. Logically, if we have taken two lots, some targets would be getting traded. if we had bought equities on any one of these lows when the RSI was highly oversold, some of those targets will be achieved. But will we short the market, or will we explore going short on the market? The answer is no. And I'll come to why the answer is no in a few seconds, or perhaps a few minutes. The interesting point of Nifty as of today is, when we zoom into price action, is simply the candlestick that was formed today. Because of the Diwali holidays that is ongoing, the market resumed trading after some days of rest, and there is this huge gap up that the market created in the morning, approximately a 350 point gap, which accounts to roughly a percentage of 1.5% on the market. So after this huge gap, we see that the market closed pretty much near the previous trade sessions. And when that actually happens, the market is threatening to form what is known as a bearish counter attack. That is, the market is moving up. On the last day or on the last few days, it gaps up, and when it gaps up, it goes to closing towards the previous day close. So here I'm marking the previous day close, and we will see that the market has not closed there exactly. What it means is that while it looks like it is forming a bearish counter attack, it is strictly speaking not a bearish counter attack, but it looks like a pretty bearish candle. And here I would point out the difference between what looks like and what is. So first of all, this is not a bearish counter attack candle, though it looks like one. Having said that, it is a bearish candle because of this huge gap up and this closing back into the previous range. Now let us assume that it is like a bearish counter attack candle. In such a case, we will have to still wait for a confirmation, which means there must be another red closing tomorrow and a new low needs to be created. This is absolutely a must for it to be a bearish counter attack candle, if at all, because you must understand that while there are specifics in trading theory, in practice traders take some leeway in trying to determine what structure is forming. For example, if I take your attention to these two candles here, for example, just these two candles here, I will narrow this width now. Now if you look at these two candles here, you will see this is a gap up candle and it has engulfed the previous candle, and this is the red closing after that, which creates a new low. In other words, this candle seems like a bearish engulfing, and this candle which I am highlighting here, it seems like a confirmation of bearish engulfing. But if you go strictly by the definition of bearish engulfing, in that case we need a higher gap up, something like this. We need a higher gap up. But you will find a lot of traders treat this as a bearish engulfing and not bother too much about a few points here and there. Similarly, if I could just perhaps drag this, which I'm not being able to due to the touchpad. If you look at this here, this looks like an evening star, but in real practice we actually need a bigger gap, right? This looks like a bullish belt hold, and actually this is, but it is not exactly a bullish engulfing, but many traders will treat this like one. So I don't want to get into being extremely fastidious whether it is or whether it is not. Let's just assume we treat this as a bearish candle. Regardless, what we need is a clear cut bearish close tomorrow with a new low. If that is to happen, then yes, we can argue that this is looking like a high on the Nifty on the short term. This trend line that we have marked below looks like the support for Nifty on the mid-term to short term. This trend line could be actually very strong, and the reason that I have mentioned is because the inclination is very gradual. And now here is the question that the trader who is seeing the daily charts has to answer. On the one hand, we have this a clear breakout from the range. On the one hand, we have a clear range breakout. On the other hand, you have the possibility. On the other hand, you have the possibility of the formation of a bearish counter attack. The question is, which direction do you choose? There is no right, no wrong. A trader who is going to trade on the short side after the confirmation of a bearish counter attack is most likely going to sell the 26,100 or 26,200 put. is most likely going to sell the 26,200 call. Such is going to be the action of the trader who goes short on the market because they are seeing one candlestick. Whereas what we would be doing, the answer is we would take no action and simply see what the market does after formation of that, and wait for the market to get oversold on the hourly or so on, in order to perhaps take positions on the daily time frame. And now coming back to why always our bias has been on the long side, and why we are not long because it's easier, is we are simply long because that's the proof of concept that we see on the extreme longer time frames. We know that at its current value the market is pretty close to its life high, and when we shift our time frames onto the monthly, what we are basically seeing, if I can just try to highlight it from the structure here, I'll just try to connect this and make this here. I'll also try to darken it a bit. Now what you will see here is this looks like a very classic saucer. The other thing, if I could just take a small trend line and show you this is just a 2-month handle. If I zoom in, perhaps this is how it'll look like. I'll remove this ellipse here. Now in other words, one of the key characteristics that the market is forming as of now is actually a cup and handle pattern on the monthly time frame. So we know that the market created its life high of 26,300 last year, September, October. We know that after that the market corrected for 5 to 7 months pretty much in a single direction. Then we also know there has been a weakish recovery rally followed up by some couple of months of consolidation. It is only now in October that the market is now threatening to break this out. And if the market actually does break this out, in a way, if it closes pretty close to where it is closing now or a little higher, then the market would have formed a cup and handle pattern. And a cup and handle pattern is necessarily a bullish pattern. It is very interesting because this is not the characteristic of Nifty. Nifty generally does not form a cup and handle pattern. What do I mean by characteristics? When you analyze, that is when you go through a book called Encyclopedia of Chart Patterns by Thomas Bulkowski, and you pick up a particular pattern that you want to study in depth, what you will see is that, let's assume you found a security which has formed a cup and handle pattern. You will see that that security forms multiple cups and handles over its trading career, so to speak. A security which forms a cup and handle on the monthly tends to form another cup and handle maybe 6 years later. And it tends to form multiple such cup and handles on the weekly and the hourly. And it is similarly a security which tends to reverse using an inverted head and shoulder or a head and shoulder pattern, also tends to form the same pattern again and again over multiple time frames. Now what Nifty has traditionally done, Nifty traditionally breaks out from triangles and flags. For example, if you look at some action like this, if I can just see, if I can connect a parallel channel here, you can perhaps see this one here, and maybe if I can select arrow right here, and I'll just try and darken everything. So let's just look here. This is obviously a bullish flag pattern, right? This is obviously a bullish flag pattern. We have discussed this pattern, that there must be 7 to 21 candlesticks forming around here, and the fewer the candles, the stronger it becomes, etc, 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 right? This is very much the characteristic of Nifty. I have seen Nifty do this, and I have seen Nifty break out from channels, like small channels, break out or break down from small channels on multiple occasions. So this is like a channel right here. This is, I'm showing on the monthly, but on the weekly this is a proper on the daily particularly, you would see this as a proper channel, and this is the breakdown of COVID. So this is traditionally what Nifty is doing, but now with the formation of a cup and handle, Nifty is changing its characteristics, so to speak. And what is the difference between a security which forms a flag versus a security which forms a cup and handle? The difference is speed. A security which forms a flag rallies very, very fast, whereas a security which forms a cup and handle shows deepish pullbacks. The next difference is obviously the trading difficulty. It is much difficult to trade slower securities than it is to trade faster securities. The third aspect is the consistency. A security which forms a cup and handle once. So a flag typically, when it gets formed, there is euphoria, the stock meets its targets, and it's usually closed. A security which starts forming cup and handle, particularly on such time frames like the monthly, they might form cup and handles for 10, 20, 30 years. In other words, even though Nifty is changing its characteristic, there is a possibility that it is changing its long term trading characteristic. And if that is happening, logically, our approach in general towards the market needs to factor the possibility of market forming deep bases repeatedly. So it will form this perhaps on the monthly, and then we'll have to wait again for it to form on the weekly or daily, and so on. There is no ambiguity if the market closes exactly where it is or slightly higher, higher the better. The market will have a clear cut 4-5,000 point target within 6 months to reach. But the formation of this cup and handle basically means, if it is truly successful, if this month does close strongly, a new high is created very soon, then we must understand that the market is ready to run on a marathon style. That is, the market could run up now for maybe 10, 15, 20 years. Like, it could be a very, very strong bull run. It'll look very weak on the time frames that we work on, that is the daily, but on the structural monthly charts, it'll continue to look very strong. And therefore, it is, if this October is obviously quite a critical month, it seems, for the market, or November, depending, in a couple of months, once you have the confirmation, there becomes real justification to plan a re-entry into the market, and this time with 24,400 as an SL. That is the low of the handle. That is, once you have a clear-cut decisive break, you want the low of the handle or the low of the saucer. It depends on which one, or you could choose a point in between, but stick to it. Whatever, you will find theory on all of it. We'll cover this at some point in time later. But yeah, key points being that the market is changing its characteristic, its trading behavior. This has got to do with the fact that the exchanges have taken actions which do not encourage faster forms of trading. They are asking us to build positions gradually longer and asking us to sit through deeper pullback phases, simply because the costs and everything are so much higher. Then obviously the whole world, as it is structurally placed, the changes on fundamental levels with regards to wars and tensions, tariffs, and basically in general the internet and things like that are significantly going to change in the coming few years. So interesting time, and a time which warrants that we maintain a structurally long view, because we are seeing a very strong, we are seeing a cup and handle on the monthly. Therefore, we should generally maintain a long view. On shorter time frames like the daily, we know the preceding move was up and there is a range break. When we are seeing a cup and handle on the monthly, when we are seeing range breaks on the daily, of course, you are also saying perhaps a bearish counter attack on the daily, but I will leave it up to you. Which direction do you want to trade in? Do you want to trade in because you're seeing this bearish counter attack, and let's say you plan, so obviously here somewhere would be the confirmation. Do you plan on going and capturing a move till here, that is from 25,800 to 25,500, or will you be the types who waits here now, because the market will tend to start getting oversold, and bet somewhere here at 25,800 in the direction that the market is going to take out this previous high? Some traders want to do both. They want to short as well as long. They can do that. It is something which I have taught, or I have tried to explain through stop and reverse techniques in the past. I have decided to keep it on a single side, and because of these multiple reasons, I have decided to keep on the long side. And if indeed the market, first of all, predominantly respects this trend line that is formed here, which the same 24,400 level, the same handle of the cup and handle that we discussed on the monthly, I am willing to bear the pullbacks that come on the market, and I'll continue to look at buying in oversold conditions. This would generally be my plan, and these would be the reason. Of course, I will see divergences, and of course I will see bearish candles, but will I act on them? I'm not too sure. I will rather wait for perhaps bullish confirmations, hopefully close to the trend line, if that opportunity comes. If not, then somewhere in between. Like we know that, just if I reconnect this range, So we know that 25,300 has to be a reasonable support. We can see that in the pattern itself. So yes, so interesting. It's interesting how the price action builds up. It's interesting how the market narrates a story, and how technical analysis helps us get a sense of where the price is at and what decisions and what plans we should be forming. Um, there is obviously a lot more to the subject, but the idea is to discuss the concepts that we are seeing in the market. So if you're seeing a potential bearish counterattack, which means that today in the market, today in the morning, the market woke up very excited. There was a huge gap up, a lot of expectations, and then it all fizzled out. So that will be converted into skepticism. But how much skepticism? And is it enough for us to short? Is it enough for us to give up profits? These are questions that a trader has to ask themselves for each of the 6 hours that the market is functioning during the day. And the objective of these videos is simply to share how I am seeing it. It is not to, I mean, of course, eventually it will influence your trading decisions. But the explicit objective is not to influence your trading decision. The explicit objective is to discuss a range break, a cup and handle, and the formation of contradicting candles in direction of the longer trend. I hope that some aspects of this video were useful to you. If you have any queries, or if you would like, if you find certain stocks which are interesting and you would like to review them, then it'll be great if you just mention a stock name along with the time frame that you want to assess it. It will also be very good if you can share a little bit of a background of the stock. What do you know about the stock, the fundamentals of the stock? What has your history been trading that stock? The reason is because obviously I'll read the comments, but in general, people will read the comments long after the video has been created, and they'll be able to relate with the, you could say, the narrative of an individual. For example, if you just pick up a stock, I'm choosing with the letter A, let's say Adani Enterprises or Adani Ports or Adani Green, you would have some, either it's the absolute first time you're looking into that stock and it's exciting you, or you have some history with the stock or some understanding of the stock. And so yes, we can analyze it technically, but I would be really keen to know on why are you selecting that particular stock for analysis technically. Is it fundamental? Is it news? Is it sentiment? Or is it your watch list criteria? It'll be good to know. It adds more context to the videos that we create. Once again, I would like to thank you for your time, and I would like to thank you for the many questions, comments, likes, etc. I wish you all the best for the remaining of trading week. I'll see you soon. Thank you.